everybody, it's me, Max Farrell from DexFXMarkets.com. In this Dex Atomic series, we're going to talk about the process of finding the right strike price. Now, as you remember, the strike price is that statement that we talked about with the indicative price on it, right? We should know what the indicative is now and what the strike is and what the bid offer or the market price is, right? We're going to refer to the bid offer and the current market as the market price, whatever it might be, okay? Now, just a word to the wise. One thing I didn't touch on in the last video is that the market price here is derived around the market maker's price. Now, if Nadex is in the exchange and it offers a place for you and the market maker to go into a contract together to be able to keep that, the market makers make these prices and offer these out. Now, some other traders do by getting into certain prices, but this is the underlying market that they use on derivatives for the market exchange. So keep in mind, you're up against a huge company when it comes to like the market makers. Now, Nadex is just a guy in between. All right. So we're going to look on how to select the right market price or the right indicative price. We're going to look at how to select the right strike from this process using a couple different variables. The first one is where is you at in the money, where is the market price at, and where is this price in relative to the chart. Okay, so now let's get started. We're going to look at this AUD/USD process here. I would like to normally start at the top of the hour, excuse me, and create a trade packet, if you will, of the success of the process, right? So I would really like to be trading the process itself. So when we choose a strike price, keep in mind that we're going to be using dynamic structure, support and resistance, and we're going to be looking at small things like how close is the market of the previous valley or hill, where is that peak at compared to the support and resistance. There's a few variables we're going to look at. The first thing that we do when we get to a signal that happens, let's find one that has a signal. We're gonna actually use a 2-hour chart since it's the top of the hour and it's an odd hour. So we're gonna look at this particular process here. Okay. Now this arrow was originally down underneath here, so we're going to be going back, looking left, to going to the best structure price possible, right? And where is that? Well, if you remember from our training from structure, we're looking for in between the zone or at the highest peaks possible, right? We already know that there's some contention against that right now, and there's even this first bar. So where would I go? I could go all the way back up to here, as you see, and choose and just place my line down. Where do I want to be at? And what I'm looking for is consistency. Look at this, consistency here, a little bit there, some right here with this like little railroad track happening called a head and shoulder sort of process, like give them a haircut. All right, you got it right here as well. That's 1, 2, 3, 4, 5 opportunities possibly. And even if I stretch back just a little bit over this big M area, I'm going to see it's at that same level. So what would I do? I would simply go, if I look left for the structure, I'm looking right for my price, which right there, if I hover my little cursor there, it's 6605. So now when I go over to Nadex, I'm going on my 2-hour chart, right? We're going to choose an intraday price on what strike was that on the AUD/USD. We're going to go to the demo for right now so I don't mess anything up while I'm doing this. And I'm looking for the 11 p.m. We'll talk about intraday contracts and where they're at in these processes. But for now, you're just going to follow what I'm doing. And you're going to go to the 2-hour, full 2 hours. So from 9 p.m. to an 11 p.m. trade, right? You've already stated that that level is good at that level at 6605. So you're going to jump over to here and you're going to look for 6605. Well, you're not going to get it exact. So when you're on a sell trade, if you don't have 6605, maybe you can come down to 6604. But unless that actually meets up with anything, coming into the trade is actually more risk. So what would I want to do? On a sell trade, I could pull back a little bit, but I wouldn't want to push in. Why? Because it could test it and actually end up losing from that point. So what we do is we look, and at 6606 on this, it's for a sell. I'll simply click on the button. And for now, I'm not going to worry about telling you the prices to use. Well, maybe I will. I'll just tell you to stay with $25 on the sell side and $75 on the buy side. This will get you a consistent profit of about $25 per win. Now, once I place that trade on, you see what happens. It just went down to a working order. Why did that happen? Why didn't it just go straight into being an order? Well, because sometimes the market's moving so fast, when I click on that 6606, it brings up what we refer to as a ticket. And I'll show you in the next videos on how to decipher these. But as we get into that process, I use a limit order instead of a market order. Market order means I'm going to get right into the market immediately, no matter what that side or that side says. Whereas in a limit order says, once it hits that market or that price, get back into it again, once it hits that price, I'm going to get in. So I can even set that into the future. I could say one contract for, on the sell side, for say $29 profit. And I can put it in. Okay? And then, oops. And I can put it in and it'll drop down to a working order. But as you see, excuse me, it just went in automatically. And I wasn't even expecting to do that because the price is going against it a little bit, right? And as we can see here. Now, in this part of the video of learning how to spot and get the best strike price, remember what I said, you never want to come into the price or into the direction of it above what your best dynamic structure is at. Could you come down to 6604? Yeah, you could really push it to that level, but would you want to? Could you even come down to this level? Yes, you could. But again, if you were trading all the way down here, if this arrow was all the way down here, you may have even come back to 6600 at that point as a good way to beat that. You might lose the trade at that point, but this is one of the natural losses if it does lose. Now, let's try to find another trade with a sell or a buy on it. And I'll show you from that side. Euro JPY, nope. Euro USD, nope. Great Britain Pound JPY, nope. Great Britain Pound USD, there's one with a buy. So with a buy side, trying to pick out the right strike price is the same as the sell. You're looking for that area that has as many possibilities of touches as possible. As you see, right here, right here, right here, and right here. So 1, 2, 3, 4, 5, 6. It has this possibility. And why I count this one is because as it comes up, it negates back and it almost goes straight through the half bar, right? So it almost tells me that that's just sort of kismet there, right? So I use that 29.94 as a possibility of being on the buy side. I'm going to try to find that on my strike side here. So 1.2944 is where this line is. Okay, 1.2944 on the Great Britain Pound USD. I'm going to choose 11 o'clock. 2996 is right there. And it does have money on it, but again, it's coming into the trade. I'm actually would have to move up to 06 or 2996 here, and that could actually squeeze me in just a little bit too much. Okay, so what would I have to do? I would have to come back to the next rotation down. Now, every pair has its own spread between it. Great Britain Pound USD has a 10 pip spread, as you can kind of see, 2966, 2976. Okay. Now, in future videos, I'm going to teach you how the system is read and where it comes out and how it comes out and what prices and why. But for right now, just understand that these prices are made when the pair first comes out at 9 o'clock. And so all these questions are asked at that point. Okay. So what I would do is come down to the 2986 and I would do my buy. Now, my buy doesn't have any money on it. Why would I get in for $9? Well, you don't have to. Remember what I said, you could put a working order on and you keep it a limit order, but now you got to change the price. So remember, on a sell side, it's 25. On a buy side, it's going to be the opposite of $100, so 75. Because remember, 25 plus 75 equals 100. If you're ever unsure, clicking in this ticket, you can see your max loss immediately right there and see your max profit right there. This is called the floor and this is called the ceiling. Pretty powerful, very easy to use, okay? So then I would simply just place order. And that'll put my little ticket in. Excuse me. So if the market does happen to hit 75 on that order, it will get filled. It'll pop up there and start its little job. Okay. Now, one last note before we go. if you can't find a good price to be in, and let's say your system, you already have just a ton of trades on, right? Every trade you have in working order fills your reserve because just in case it gets filled, Nadex wants to make sure that it comes out of your balance. Now, it doesn't really come out of your balance because if the moment that I go here, I click on it and I go delete remainder, okay, close that out, you'll see that my reserve turns back to 0. But it did take out for the trades that I'm in on. So keep that in mind, that even though that you are trading while you're doing a working order, the reserve, you won't be able to put on any more trades. So if you get this down to 0 and this to 0 for availability, you might be in a little bit of trouble there because you won't be able to trade anymore until that you got more money available. Now, the way that we teach you, that will never happen unless you completely blew out your account, right? We're going to teach you how to roll with this process. And when you do get one filled, to either double or triple down on that process, depending on your balance. And we'll talk about that in the incremental crawl series as we get on board. All right. I hope this finds you well. I hope that you got a good understanding of how to choose the right strike price from that process. The best way to do it is just get in and start practicing with your demo, choosing the right strikes, getting your prices in, and watching your wins and loss ratios at that point. Okay? I'm Max. This is Dex. I look forward to seeing you inside, and as always, trade well.